Dear FRS students, I'm Abil Ahmed, FR expert. In today's concept building video, we'll be discussing a very small question in which you will see that when there is a transfer of property, plant and equipment, let's say from IAS 16 to IAS 40, how to deal with that. So let's dive into the detail and let's see the entire concept through a question. And I have selected this question from FR Pre-Scene Mock June 2026. So let me share the PDF. Okay, just a minute, it's here. Simply they're asking us, what amount should city company recognize in 2008 statement of profit and loss as fair value gain in relation to the property? Okay. January 8 city company vacated its head office and started advertising the property for rent. So simply from property, plant and equipment, we are converting that to an investment property. It secured a tenant on 1st April X8 and occupied the property immediately. January X8, the carrying amount of the building was, let's say, 1.92 million. Remaining useful life was 40 years. And on the same day, the fair value was 2.6 million. Now, listen to me carefully, students. Before transferring the building from IAS 16 to IAS 40 investment property fair value model, first we have to revalue the property. And whatever the difference comes, if there's a rise in the value, that is treated as revaluation surplus, and we have to show that in OCI. On January X8, it is 2.6 million, 2.9 million on 1st April X8, and at the year end, it is 3.2 million. City company adopts the cost model for property, plant and equipment and fair value model for investment property. So from 1920, we have to first bring our building, our property to 2,600. I'm just ignoring 30. It means 2,600 minus 1920. Logically, 6,80,000 is your revaluation surplus that will go to OCI, but that is not our answer. On day 1, January 8, the fair value is 2.6 million. From 2.6 million at the year end, it is 3.2 million. In case of investment property fair value model, on each reporting date, we have to revalue the property to the fair value, and the changes in the fair value will go to P&L. And after IFRS 18, we know that whatever the change comes in the fair value, we have to show that under investing activities. So logically in P&L, we will show the revaluation, we will show the gain of fair value, which will be 3.2 million minus 2,600. There's a gain of 600. So basically, statement of profit and loss, the fair value gain in relation to the property is 600,000. So let me quickly revise for you. Simply, first, you have to bring your property, plant and equipment from their carrying amount to the updated fair value, and difference, if there's a rise, it was treated as revaluation surplus under IAS 16. After once the property is now at 2.6 million, from here onwards, we have to follow IAS 40 fair value model, and IAS 40 under fair value model, no more depreciation, and whatever the change in the fair value comes, that we have to take to P&L. So logically, the result is 600,000. So thank you very much for watching this concept building video.